Hey everyone, thank you so much for joining Archangel Alts, and here we are moving on with our next lesson plan. So very cool stuff. Okay, we look like we're all set up. Double check, not muted. Very good. So we have gone over an introduction to the chart. So we understand our candles, our timeline, our value of coin, and an overview of what the doji candles are doing as far as showing the movement and up and down movement going from up and down, green and red, and the wicks that can determine different trigger information about movement going from one place to another. Kind of measuring the balance between the bulls and the bears. It's like a constant warring going on. Who will win? Which will go up or down? Who knows? Exciting. So that's that first part. Then we did an overview on the indicators that we're going to use. We're using volume, MACD, Bollinger Bands, Stock RSI, and VWAP. So those together give us quite a unique view of what's happening. So now we're going to do an introduction to each individual indicator. There's 5 that we're going to be using. There's lots of other choices. There's a million different ways to tweak them. Everybody has their own thing going on. I think what we're doing is a little bit on the unique side, kind of interesting, kind of exciting. So we're just going to go over a brief overview of what each of these things mean. So starting with volume. And just about anywhere that you're trading, you're probably going to see an example of something at least as minimal like this, except for Robinhood, which is a little bit just here's a mountainside, figure it out. No, they give you a little bit better than that, sort of, not really. So with our volume, it keeps the same timeline that you choose for your candle index length of time. So if we're looking at 5-minute candles, we're looking at 5-minute volume. Now, as you can see in this example, we also have a little bit of an overlap. These two lines that overlap each other. And you can see that this is providing your moving average right on top of your volume. So if you do want to have just a very simplified version of your moving average, it's right there. Some people would at first glance look at this and say, well, isn't this just like a chart of the same thing you see up here? Surprisingly, yes, they do often look very much like each other, but they can also get into certain patterns where they look very different. As an example, well, I'll just describe this. You would think that if this is going up more, that you would just always see more here. Well, as you probably could see, there's a lot of height to these over here, but that's not a huge move up. And there's not, it's about the same looking height, even a little bit less, just more consolidated, but it went up a good deal more. What I see, understanding kind of the balance that can happen and the changes that happen, is that this was a stronger move up, and it happened quicker, and it had a very strong spike, a peak to it, and then came down a little bit, and then it was headed for even more, well, about the same angle as this one, but it kind of weakened as it went along. So it started this slope, this rainbow shape, and it started moving down. Whenever you see this smooth arc, it's not as powerful as when you have something like this, that, this didn't start as a spike. Let me see if there's an up that has that kind of thing to it. And you can see the volume has been dropping as we go along because these are much bigger than these right here. But here's an example of very strong peaks up. You have these taller volume spikes, and the reason for that is very specifically, very logically, that up is more, bigger is more. There was a lot of buying in happening as this was happening, and as you buy in more and more, the stakes go up. People are excited to get this, and they're willing to pay. Okay, it reaches a point where people are buying, and then it's overbought. And so people are going to start to sell off, and it peaks out. And then it becomes, usually it reaches a point where it's oversold. And that cycle continues on and on and on. So we're always going to look at this as buying and selling, buying until it reaches a certain point where supply and demand changes, and then selling off. Try to keep things simple and logical. So your volume is how much buying and selling is going on. And if we just had, what some things show you just as a mountainside without any color indicators or, breaking it down into the timeline, it's still accurate information. It'll still give you, the right average as you're changing this stuff. But it's really great. It's so simple, but, just having the green and red for your volume for whatever period of time, this really is the most accurate way to look at it, though. If you're losing more value within that minute of time and it ends there, the volume covers the same length of time as the candle. There's a little bit of selling, but about the same amount of selling as there was buying. That's pretty much what is going on. As there was a little bit more selling, and then a little bit more buying going on here, but the candle gives us a lot of information about whether that's going to hold up or not, and the answer is no, it doesn't. So more buying, more selling, some selling, more selling, some selling, more selling. So our volume going up over here doesn't mean that Bitcoin is just worth more and more and more and more, hundreds of millions of dollars. This is the amount of money that is transacting in a 24-hour period. This breaks that 24-hour period down into whatever candle length you want. If you put it at 1 hour, then it's breaking the 24-hour volume down into 24 candles. And you'll see a day, within a 24 candle length. If you break down to here, you get 4 an hour. So it'd be, 96 different candles representing the same day. But it's going to break that down. And as you can see, these numbers over here, I've got these different points, but the easiest way to tell, that box, I double click and it pulls it up, and the very bottom value is the volume, and it's going to show you how much transacted at each of those points. And so when you start to look at the picture that you get adding your volume to the basic chart, your 24-hour volume, but you want to know what's happening and whether that's going to affect what happens next. So you can see how many coins are being bought at that time or sold at that time. And you can watch it live, so that does change as it's going along. But you also are able to see at what value that buying and selling is taking place. So, obviously, the trade history, letting you know exactly when stuff sold off or bought in. What people are wanting to ask for it, what people are willing to sell. They're asking a certain price to sell it off to. What are people willing to buy in with? All these things factored in to look at what is the value of all these different things. Now you can measure that against, just how much volume is happening at that moment. If you're a numbers person and you just get it instantly by looking, then this right here might actually be more value to you than getting the visualization over here. For most people, just a simple, bigger is more, shorter is less, taller is more, shorter is less, red is down, green is up. There you go. But take all those together, and you have about 16 different combinations of things that can happen, and then you have the moving average on top of that, and my goodness. So sometimes these are an easy, instantly recognizable correlation to each other. I mean, exactly what looks like is happening. Sometimes they are surprisingly different in some ways. Like, you would think that this would have lots of tall green if it goes up this much, but these gradual moves don't necessarily take a lot of volume to get it done. But they will eventually hit a point where the value far outweighs the amount of volume going in that direction, and you'll hit a point where it's absolutely overbought, and it'll start to drop. And especially if the volume is dropping, but very small transactions are going up and up and up and up, and there's not a lot selling off, then yeah, you're going to see it fall pretty quick. So that's a little bit of what I think happened over here. But you can see in the grand scheme of things, it's got a little bit of a balance to it. It's not as severe as what happened over here. So interesting stuff, right? Yep. So that is our volume in a nutshell. Volume is the amount. What amount of what? The amount of buying and selling taking place. And over what period of time? Well, you've got your 24-hour running over here, but you can break it down to whatever your candle length is. So it's just a smart, very instant, really cool way to represent stuff. So technically, that same information is being built right here in the doji candle at the same time. And it's really pretty remarkable that it does what it does. So I really like the way that Binance draws these two. There's actually, different ways that the doji candles can be represented. I really like what they've chosen here. It's very cool. So even it would be even possible that these looked fairly similar to these, and for the volume to still be less. This is kind of like the most expected representation of that, where you tend to see less movement when there's less volume. But that's not necessarily always going to be the case. But we do also have a good visual representation of the fact that big, fast moves, though they're exciting, tend to upset the balance between whatever you're trading. The main, if it was dollars, then, this will be the fiat against whatever else. In this case, Bitcoin is that standard that we're trading the other things against. So what it does has a direct impact and an instant impact on other stuff. I would much rather see a very steady amount of green around this range more often and watch that effect lift up our positions than to see something huge happen here, huge buy-in or sell-off. But the unfortunate truth is that shakes the synchronization of the other coins, and then we have to do the uphill battle all over again. So this is our combination. When you take this information and put it together with this timeline, value, 24-hour volume, your high, your low, and being able to watch the actual positions, what are people willing to pay, how much is going on at each of those positions. Are there 20 different people? Are there 100 different people? Are there only 2 people that are willing to buy in at a certain position, or holding out for something really high? All that's going on, and then the results of that are just zooming through the trade history, and you got just enough time to see it before the next thing happens. Put all that together, it's a tremendous amount of information that you can read. It's not perfectly predictive, but there are predictive things inside the candles and the volume. You put that together and you got lots of combinations. So that is an overview on your volume. I hope that this was helpful, and moving on to the next one. God bless you, and for now, Archangel Alts out.